Please explain what you mean by squeeze. These squeezes are something that retail traders are hunting for. Squeeze is a term that is used in trading for something called a short squeeze. What does that mean? A short squeeze is when traders that are short a stock are forced to cover. You can short a stock by borrowing shares that you don't actually own. You can borrow them from your broker and sell them into the market. The idea is that if a stock is at $10, if you think the stock's going to go down, you'll short it. You'll borrow shares from your broker. You'll sell those shares at $10. If the stock goes down to $8, you'll buy the shares back at $8. You'll return the shares to your broker. You make the spread of $2. So if you borrow 1,000 shares from your broker, you sell those 1,000 shares at 10. The stock goes down to 8. You buy those 1,000 shares back. You actually just made $2,000. What happens with a short squeeze when a lot of traders come in and short the stock, you'll see, okay, and the stock actually starts to go higher instead of going down. Those traders that are short start covering their position, meaning they're buying the shares back that they sold. Because you borrowed the shares from your broker and sold them, you still have to return them to your broker. So you're gonna have to cover your short position or buy those shares back at some point. Now, when the price of the stock is going above the price that the short seller sold the shares at, that's when a squeeze is potentially in play and the stock starts to go higher. And as the stock goes higher, that causes all those short sellers to buy, which then adds more buying pressure to the stock because you also have buyers that are going long. So a buyer might say, like me, MRIN today, I bought MRIN to go long. You have other traders that shorted it thinking it was going to go down. And when the stock went up, not only do you have traders like me and other traders around the world that are buying the stock, you also have traders that were short that are also buying the stock because they need to cover their short position. And that's when you get a short squeeze. And short squeezes are very, very powerful moves. Retail traders hunt for them because they're powerful moves. They're very big moves, and the moves happen very quickly. So usually when you have a short squeeze, the stock can go up a very, very big amount very, very quickly, and retail traders love that. James, also welcome, my friend, on becoming a lifetime member today. You got me for life now, brother. You got me for life now.